Our first panelist is Kate, who I think most people have had the pleasure of interacting with now. Kate's one of my partners at Baukunst, and joining her is going to be Sydney Thomas, one of the principals at Precursor, a pre-seed focused VC fund based here in San Francisco. And Stephan's going to come on stage again to be kind of a moderator and facilitator for the discussion as well. And they're going to talk together about like what raising money looks like at company formation. I think it's a little bit of a special beast raising capital when there's not much to show yet, and so it'll be really interesting to get kind of an inside story from investors themselves and have a conversation there. So if you join me in welcoming Sydney and Stephan to the stage.
All right. Thank you, everybody. So I wanted to start with the term company formation because, we mentioned pre-seed, but I feel like a kind of meta theme of this conference is just words matter somehow. Like, so how do you define that stage, that phase of life of a company? Go for it.
Yeah, I'll take it. So we actually used company formation really intentionally, and there was a whole internal discussion about how do we at Baukunst talk about the phase that we invest. And I think over time, there's been like a lexical slip around like stage names. Like my partner Axel, has been investing in what we call pre-seed today since the 90s, and then it was called Series A, right? And now Series A's are like $20 million, $30 million, and people are kind of in like the growth phases. So we say company formation because I feel like that really describes the stage at which we actually wish to invest. And it's like kind of removing the abstracted language of like seed and pre-seed. What is pre-seed even, But at the same time, we acknowledge that we exist within a community of people who put tags on things. And so I think like company formation to us is also pre-seed now.
What is the end of company formation? How do you know you've formed a company? This is kind of a thing we were talking about yesterday.
Yeah, totally.
Sydney, I would love to also get your take on that term as well.
Yeah, I think that's a really interesting point, because what I think about it pre-seed is, and I guess the definition of company formation to me is that you have a thesis on something that you want to create in this world that is going to then become a company. And so what that actually becomes, once you've formed the company, started hiring people, started actually playing out this thesis, doesn't actually need to be the company that you had the thesis on in the first place. We see pivots all the time. And so I think company formation is literally like you have aggregated a group of people around a common mission. Whether or not that mission is the one you end up with in 5 to 10 years is kind of doesn't matter, honestly. But that's how I think about it.
And how do you define your role as an investor, as a venture capitalist in that phase of formation?
Oh man, it's such a good question. I think me and Kate actually think about this really similarly in that in the early stages, you are so much more of a sounding board. You're so much more of a mentor. You're so much more of a grounding force to the founders because everything is changing all the time. And so that first year is just rocky. It's just a mess. And so we try to be the least messy, at least a little less messy, to help, the push and allow the company to become what it's meant to be. So remove barriers as much as possible.
Yeah, I resonate with that. I think the other thing that's unique about investing at company formation is there's often no product yet, right? And you can tell we're very product-oriented people at Baukunst. And I think one of the values of raising a pre-seed round is you have the luxury, hopefully, if you work with a collaborative investor, to kind of take the time to build the product and to get it right and to iterate before you're putting it out in the world and people are coming to you at the board meeting saying, well, you said you were going to grow 20% month over month or 30% month over month and I'm only seeing 19, right? Not to say that that's always what happens, but once you're kind of have a product in market and you're in this little bit of a hamster wheel, right?
Yeah.
And out in the public. And I think there's something really special about the building phase that is a little bit different than the growth phase. And that's really what we love to do. Like we love to collaborate with teams that are in that phase. And I think it is a very specialized skill. And it's just very different than kind of the growth later stage investors.
The interactions I've seen kind of from the outside between you and Reggie, for example, in terms of like there's a collaborative aspect to it. It's like relationship goals, but for like, VC to founder. Like, what is that relationship goals? Like, how do you think about that? And maybe give us a peek into what, how it was in that example or another one. Like, I would love to be a fly on the wall in some of those board meetings.
Well, interestingly, we're both investors in Eternal, in Reggie's company, which is kind of interesting. We have a bunch of companies that we collaborate on. I think for me, what I really love is figuring out, like, what does this person need from me, right? And each person is unique, each founder is unique, where they're coming from is unique, what they're building is unique. And so I think, like, Reggie actually invites me to step up in a way that is different than I step up in my other boards. Like, he's not coming to me because he's like, oh, I've got a problem and I want to solve it. He's coming to me, and I think that we are a really good team because there's a mutual sense of trust where he knows that I'm not going to tell him if he's right or wrong, but that what I'm trying to do is, like, help show him that I trust him. And to give that sense of trust while also holding him accountable, right? And I think that in any relationship, like, you want a partner that both gives you the benefit of the doubt and trusts you, and is going to call you on your shit, right? And that also allows you to build trust, right? That's a positive feedback loop in the good way.
Do you have a perspective on that?
I love that. I also want to hear Reggie's feedback.
Let's just do a little post-mortem, Reggie.
Maybe later.
No, I deeply agree with that.
Okay. I love that because I think there is so much of this. The trust is key. I think in these early days and we talked a little bit about this in our pre-brief. It was around, like, when you're investing in this stage, you're literally just investing in that person.
Yeah.
And so they both need to have a trust established with each other because there isn't anything else to go off of, which I think is really exciting.
And you two have collaborated on a bunch of deals. Can you describe a little bit about what you see in, like, that collaboration between the two of you?
Ooh, that's a good question. So, backstory, Kate is one of the first people I met in venture ever. And so I was at a conference. Actually, no, we actually don't agree on when we met because we just had this convo. But I think we met when I was at a conference that was very overwhelming, not like this at all, but like just I'm so happy there's no other VCs here also. There's just like this place where there's a whole bunch of VCs, a whole bunch of LPs, which are basically investors in VCs. And it's just like a very high stress, high anxiety environment because the VCs are pitching the LPs like just pretty much all day. And Kate, I think you pulled me aside. Either I pulled you aside or you pulled me aside, and I was just like, there's another woman here, and two, a woman that seems like around my age, and so let's just chat. And since then, I feel like that's what you've been for me, is just like this grounding force, because you were in venture before me, and so has just been someone to lean on. So.
Full disclosure, I'm a small LP in Baukunst, so watch yourself here,
You're a cool LP.
These questions are meaningfully impacting. Actually, one of the things that I find, and I'm just dipping my toes a little bit into angel investing and being an LP, for example, and one of the things that I find so stressful about this stage, thinking about, like, founders are coming to you with a dream of an idea that they see for the world, a product that they want to build, and it's a limited amount of funds that you have to work with. It is kind of a zero-sum game to some extent, and you have to make some decisions, and you have to say no to some people. And when you're saying no, sometimes it's more of a no that it's not for us, it's not a fit with our ethos as a company, but sometimes it's a no that's like, this is a bad idea. And sometimes those
Or worse, it's a good idea, but you're not very good.
Yeah, so
That's the hardest one.
How do you deal with that crushing of people's dreams on a daily basis?
That's our whole job, is dream crushing. It's terrible. I hate saying no. I
Yeah.
really do. And you have to start developing a tough skin around it pretty early on. So I think the hope that I have is that I'll never truly get over that. Because I think once I've gotten over that, then I'm not really human, you know? Seriously, I feel like at that point I've become some sort of robot who can just like automate emails, like, no, not this because of this. And I want to always maintain that very human relationship with founders because I think that, one, it's really hard, and so when you're able to do it, that's actually a huge differentiator that you have amongst other VCs. And two, that's just who I am. I don't think anyone would like me that much, like my family, not you guys. And like other founders probably are fine if I'm not nice because I'll have money. But I want to be a huge impact. I want to be a huge influence in my family's life. What I'm doing this for is actually a lot of what I talk about is that my mom's from West Virginia, one of 12 siblings growing up. My dad is from Denver, one of two, but also was on welfare for a bit. And so my family is not one that comes from wealth. And so the point of what I'm doing is to invest into companies that are actually making a difference for those communities, for the communities of my cousins, of my aunties, of my uncles, of my, family members who I've never met, because that's what makes it all feel real. And so that requires me to have this very human element that I don't ever want to give up.
How do you go about saying no then when you'd have to? How do you give that feedback? Because there's also this strange dynamic, I think, in VC where you don't want to close the door entirely for some founders for maybe later rounds. In your case, maybe that doesn't come up as much because you're really focused on this stage. Kate, do you have a way to say no? How do you go about it?
I have done a lot of work with boundaries lately, and I have really decided that no is a gift.
Yeah.
Right? Like a quick no is a gift because they need to move on and talk to someone else. And another thing that I spent a lot of cycles on, especially in the early days, was giving people so much feedback because I was so afraid of being like the evil VC that wouldn't tell them what was really going on with their company, that wouldn't give feedback. And the truth is, like, I don't have the capacity to give that amount of feedback to everyone that pitches me, let alone everyone that spams my inbox, right? And so what I've decided is that if I spend time with you, like if we get on a call and we speak and we connect, like I will give you a reason. The one reason that I don't give anymore is that I don't think you're a strong entrepreneur because I've given that feedback and is not good, right? Like people get mad and that makes sense, right? You're saying I don't believe in you. And I feel like there's a big discourse around how evil VCs are and how we're not transparent. And let me tell you, as someone that has really tried to be transparent, like I have given so much of my time to people who have taken it. And there's only so much of me. And so I've really decided that sometimes the kindest gift is a quick, firm no. And it's not always going to come with feedback, and that's okay.
Do you think that there are just as many great ideas as ever? It feels like there's so many more seed stage deals happening. Is the number of great ideas also increasing or pretty much staying the same?
So I actually think it's increasing. That's interesting.
I'm
so
very
we'll have a
yeah.
convo on
Let's
this.
hear it. Let's hear it, Sydney.
Because I think that what I've seen changing in the last 2 to 3 years of venture is one, the scale in which we've seen just the number of venture capitalists increase. There's so many different types of VCs now. You can spin up an SPV and then you're a VC. You can invest via an angel group and then you're a VC. And I think that allows for a velocity of ideas to get funded that hadn't actually been funded 3 to 5 years ago, that I think is really interesting, just because I think that then allows so many more people to become founders. And not just founders, but become tech founders that might not have been able to become tech founders 3 to 5 years ago when they didn't have any connected tissue to someone who could actually invest in them on the VC side.
Yeah, I hear that. I think, to me, a truly great idea is actually pretty rare, and a truly backable team that can bring a great idea to fruition on the 10-plus year journey that it will take to bring that idea to fruition is also pretty rare. And they absolutely exist, and we have the privilege to work with a lot of them. But I think right now it's very cool to be a founder. And so there's a lot of people, pitching things that I personally, if it was to pass the, do we think this should exist? I love that channel. Like, no. Like why? This is going to make something 6% more efficient. Maybe you're going to make some money off of it. But I don't believe venture capital exists purely to make more money, right? I understand how money works. I deal in money. Money is in many ways a technology. But I believe venture capital's purpose is to find people with really ambitious ideas that require capital in order to build, transformational tools and technology. And I think that that's very different than just a company that needs money. So I think the truly great, no. The volume, oh my God. And that makes it so much harder, right? Because then you're hopefully walking up to the haystack with a magnet, right? But oftentimes you don't have that. And so the sorting becomes tougher when you have this volume of people that may or may not be lit up by the thing that they're telling you they're going to commit 10 years of their life to.
I also think really fast that also more broadly is demonstrated in both of our theses. I think that Baukunst is much more of a concentrated pre-seed fund, and Precursor's main differentiator in the pre-seed market is that it's much more of a differentiated fund. And so the number of companies that Precursor has backed compared to Baukunst is just completely different from a scale perspective. And so I think one of the coolest thing about being a VC is that everyone is doing it because they think that they're seeing the market differently. And so I think if you have too many VCs thinking the same, you're in the wrong room. And so I really like that, especially at pre-seed, that there's a lot of different opinions about what a good pre-seed company looks like, what type of ideas are interesting, what it takes to become successful, all of these things.
And what defines success, right?
Yeah, very good point.
How do you think about second-time, third-time founders versus brand-new founders? I know both of you have a big emphasis on underrepresented founders. You also have a fund to return. How do you mix all of those? What's the right, set of percentages? Do you think that way? Or do you make a decision just per person who's coming to you that you're excited about?
I don't think so there's a lot of data on first-time fund managers actually being outperforming legacy fund managers because they don't have all of, I think, the institutional baggage, frankly, of what legacy fund managers do. And I'm talking about legacy being a Kleiner or a Sequoia, maybe. I really don't know their returns. Or an Andreessen, one of those. And the first-time fund managers being folks like us. And I think that the reason that exists is the same reason that I'm really biased towards first-time founders, because I think that they're actually able to see things unencumbered by a lot of the shit, for lack of a better word, that is, I think, second-time founders sometimes bring along with them. I also think that generally there's a bias in venture towards second-time founders because folks think, oh, well, even if they built this one thing and it didn't work, they know the teams to assemble at any given point of their company formation to allow them to hit some random goal. And I think that's not right, because I think you're optimizing then for almost an operations perspective and not really on a clarity of an idea or a vision perspective. And so I'm really excited about first-time first-time founders, and also I think underrepresented founders, largely because similar to the first-time founders, their perspective is just completely different because their life was different. In many cases, not in all cases, than the bro who like worked at Stripe.
We
for
really
10
rag
plus
on like
years.
the white male like Stripe VP. I don't know. They like exist in like the zeitgeist of
I
people that
know.
we don't want to fund.
People love talking about
I've
Stripe.
never been at Stripe, so I'll be okay maybe.
How do you think about it?
I'm trying to go back to the question.
First-time founders,
Oh.
like known commodities. Like, how
totally.
do you think about that
The truth is,
distribution?
I honestly don't think about
Yeah.
it. I really don't. I think it's interesting because a lot of LPs ask about it.
Mm.
And I found even to the question to be sort of bizarre. The thing that like we're looking for is sort of the proof that this person is the right person to start this thing. And sometimes that's because of extreme technical talent, right? Like for certain kinds of companies, that really matters. You need a really special technical person. Sometimes it's because they've built something like this before and they've seen an opportunity and they're going to go after it again. So being a second-time founder can play into it. But we've backed everything from folks right out of school, early 20s, or still in college. I've given some term sheets to folks in college that are pair co-investment of ours. Like they were still in their senior year of undergrad at Stanford when we split the pre-seed, and they're off to the races, scaling like crazy. To founders that have sold their companies and IPOs for multi-billion dollars and are coming back again. So we really have the full gamut in the portfolio, and the truth is that does not weigh that much into our decision making. Like we aren't judging it based on that. We are really trying to extrapolate away. Is this an interesting market? Does this person have an edge in that market? If so, why? And is the how that they're applying something that feels needle moving, industry changing? And so it's really more about that mix as opposed to a particular professional background or experience.
Yeah, maybe there's a version of that question is it's really how much risk is this founder taking, or is this idea taking, like relative to the market? And do you even try to evaluate that somehow in your process?
I feel like Jason from Fido, I think, said it best yesterday morning, where there was a moment that happened for him where starting the company became an imperative.
Right.
Where there was no question that he had to start this company. And I just got goosebumps thinking about it, right? There's a lot of different things that make us understand that that's how a founder feels. But that's what we want to understand, right? That this is the thing that they must do. And so I think that's what we're looking for.
One of the go ahead, yeah.
I love that. I think one thing that I always also try to contextualize in these conversations is that, everyone thinks that VCs are predicting the future, but we're not. The founders are. We're wrong more often than we're right. And so we have no crystal ball. We have strong opinions because that's our job. But I don't think that, at the end of the day, we're the ones who are really pushing the market forward in any given way, any given year. It really is the founders doing that work. And so I think that's one thing that I always try to remember in my analysis too, is that I don't know. I have really no idea what's going to happen in the world in the next 6 months, let alone the next day. And so I come to each decision with a really strong both gut feeling and also just my own analysis that I'll do in my head, and also recognize that at pre-seed, the failure rate is very high, and that's the point. We're taking really risky bets because we think that these founders are onto something magnificent. And so I also just like throwing that part into it too.
When I think about the options that are available to founders to get money for their idea, it seems like it's just constantly broadening. And we heard from Helium yesterday, there's like all this activity going on around blockchain. But there's also things like, Kickstarter is 15 years old now, and like that's a very well-established model. How do you think about that? Is that a conversation that you're having? What is the value of VC within that landscape, and how does it fit in with the other options that might be out there?
I would say like a few years ago, everyone was really hating on crowdfunding. I think that the VC industry in particular was like, oh, if you've crowdfunded, it's an if then or if this or that scenario. And what I've seen, especially with CPG products, Pepper, that we've done, these other types of funding models are actually a really interesting way to catalyze a community that you can't do with traditional VC models that I think is fascinating. It's allowing others to have actually equity in your company, to have a stake in your company, to have a feeling of ownership in your brand that I think is very interesting. And I think there's a lot of different alternative models now too, with regards to studio models, with regards to party round. I don't know if you guys saw, there's a company that's basically helping facilitate party rounds, which is just like a lot of VCs that are investing in companies. And so I think the cool thing is that if you're a founder, you kind of, it's almost like going to a bank and picking out the best financial product, for what you're building. I think when you're starting a company, it's a very similar thing. It's like, is VC best? Is studio best? Is party round best? Is crowdfunding best? Or is it a mix of these 2 and 3, which is really cool.
Yeah, I think, one of the things that I think about is, like, we love collaboration and have, like, a deep belief that, like, collaborators make us better. And so I think if you're gonna go and raise VC, if you've decided that that's the right asset, for you, then it's really about picking the right people, right? Who do you want to collaborate with? And I think a big part of why people raise money from this person or this fund or that fund is they believe that there's a collaborator in there that's going to help them raise their game, and that is our job, right? Like our job, we use capital as a means to build and cement a relationship. And in that relationship, it is our responsibility to help make that company better. And if we don't do that, we have failed, even if we make money, right? And so I do think that's also gets into why VC, right? A lot of these platforms could bring other things, like an engaged community, et cetera. And starting a company is really hard, right? And it's very helpful when you get to be in the room with people that spend all of their time helping companies. Right, and they show up every day thinking about how can I make Bobby a little bit better, right? And I think building those avenues of trust and building those collaborative partnerships in teams can happen outside of your own org, and capital can be one way to make that relationship mutually incentivized.
How do you think about founders and ideas that need more money than expected during that kind of formation stage?
Totally. I mean, I think for us too, one of the reasons we're a venture capital firm, we're a venture capital firm because we believe that is the product that our customer needs, right? We were the first check into Tonal. Nobody wanted to touch Tonal with a 10-foot pole, really technically ambitious, solo founder. They didn't ship product until post-Series B, right? And so when you are tackling these really technically ambitious companies, or Bobby, which is an infant formula company, it's CPG, but it's FDA approved. It took them 3 years from first check to shipping. And wow, what a company that's turning out to be, right? But there are types of companies that require real money and time and great talent. And that's what we're here to facilitate. And so I think it's more about, for us, it's looking for those ideas wherein we can serve them through capital. And we get excited about that. That's a great fit for us. And it's also our job to make sure they don't run out of money. So,
I love that. I was actually on a founder call a few days ago, and he was expressing to me how important it is for him to have VCs who are backing him, who aren't giving up on him, because the expectation that we have of him is that he's not going to give up on the company. And I thought that was a really interesting reframe that I hadn't really acknowledged before, is when we are expecting these people to pull off these really technically ambitious, these very very just hugely amazing feats, why are we quick to say you haven't done enough in 6 months of a company? And I don't think either of us operate that way, but I think that there's other investors who do. And so I think there is this expectation that you're on a very long-term journey with this person and with this company. And so you are going to ride the highs and you're going to ride the lows, and you're going to try and be that grounding force with this person throughout that entire journey. That is expected, I think, of founders of VCs just as much as VCs of founders.
And I think just one more point, because you mentioned we're both very passionate about investing in underrepresented founders. Like when I started investing in pre-seed 2013, like average check size was 100K, right? And a lot of what I saw, especially with the underrepresented founders, is they were constantly fundraising, right? Like to get the money that they needed to keep going, like they were having to do two things at once all the time. Yeah. And like over the years, and now like with Baukunst, like when we say yes to a company, like we will often take the full pre-seed. Like we'll work with them in the diligence process to put together what we believe like a strong operating plan is, and we will sign up to fund it, like to the milestones that we think like help de-risk to that next round. We're not saying we're going to fund you forever, but I think that's something that has felt really important to us, is to like, if we get to yes, we want to show up with conviction and like solve that financing. So, and I think that is especially meaningful for companies that are going to take time to come to market, where they're not going to have nice, sweet month-over-month growth in 6 or 8 months, right? And so that's just a part of the model that looks like check size, but actually is philosophy.
I have some more questions for you, but I also want to open it up. Anyone have immediate questions for Sydney and Kate? I will continue peppering them if not. I think one of the questions while the mics get passed around that I have is, we're here in the Long Now Foundation building. What is your relationship between the like 10-year arc of a fund and the multi-100-year arc of what this like organization's trying to do? Do you have one?
I think Sydney already said it, which is like, I actually do believe that like I exist in this life to empower people with capital that have never been empowered with capital. And that is like a way that my values show up in my work, and it's part of what makes me so passionate about my work and makes me feel like I get to self-actualize in my work. And so for me, like there's the impact of the technology, but I actually think it's the impact of who gets the chance to build these things that will be the most lasting impact of our generation if we don't screw it up.
The good pilgrims for Mars.
I mean, but our like my job isn't to be the pilgrim. My job is to be like, hey, it looks like you've got a shot at being a pilgrim.
Yeah.
Would you like some money to buy a boat?
I love that.
Someone interested in asking a question from our panelist?
Hello. This is such a like wonderful conversation to listen in on. I feel like everyone was just like for a moment like just basking in the afterglow of the questions so far. I was just, well, this is like such a general question, and I'm sure you get asked this a lot, but just curious, like how did both of y'all get your start in investing? I feel like sometimes I'll see friends become investors, and I'm just like, how, like what? I don't know, like how, like did you just come out of a tunnel and like begin investing? I have no idea, but would love to hear how you got your start.
Yeah, so I have an art history and cultural studies degree. I did not study engineering. I did not study business. I was building houses with Habitat for Humanity in the rural South, and some angel investors wanted to start an accelerator program. And one of the companies that I've stepped up to do it, because I thought, seems interesting, why not? Like life experience. One of the companies that I invested in was founded by Katie Pelton. And she said, you need to come to San Francisco. And my husband and I lived in their warehouse for 2 months. And they falsified an employment letter so we could qualify for our first apartment here. And I met Axel. And like Axel took a chance on me, and I took a chance on Axel, and we've been investing together now for 8 years. So like in that time, I hope what Axel saw in me was the same thing that we see in entrepreneurs, which is like, this person has something a little different, you know, and gave me that shot. And it's like been one of the greatest gifts of my life.
I love that. I actually didn't know that story. So my story is similarly coming from the public sector. I was actually working in the Bloomberg administration for a number of years, interned for Congresswoman Barbara Lee, who is now my congresswoman. I'm so happy. And so once I started working in the Bloomberg administration, I was like, interesting. It seems like he has a lot of power, and that's largely because he also has a lot of money. So how do I get that money? What decided to go to business school. I mean, he really is a very dictatorial mayor. I'm happy to have a conversation on that. And so went to business school to Berkeley and spent those 2 years just like testing all the things because I'd never thought I wanted to be in the private sector before. So I was in an internship all the time, was barely in class. Decided that VC seemed actually like a way where I could kind of hedge my bets, honestly, where I wouldn't have to promise my life to one company or one idea forever because I actually got burned at a few startups that I interned for in business school. And also, like, it was this way to create an entire kind of like landslide or like movement of companies that I thought would be hugely impactful in the future of the world. And so I got introduced to Frida Kapor. I cold emailed her. She is a philanthropist largely in Oakland, and was like, hey, I want to work with you all. How do I work there? And she's like, well, I actually don't have a job, but I know someone who needs help. And so that was Charles Hudson, who's now my boss at Precursor Ventures. And so I just called him every month for 6 months straight. And then he's like, okay, fine. And I've been at Precursor since. That was almost 6 years ago.
Too many softballs here. Go ahead. I want to also get maybe Reggie or Rebecca or someone who's got a hardball question for our panelists. Go ahead.
Yeah, so as a white guy, I think that it's awesome that there's investment, at least some investment in underrepresented and female founders, especially since a lot of teams, don't have a sense of their customer. And I think the customer is, especially if it's an all-white team, or all-male team or all-young Stanford grad team coming to a problem. So that's cool. But I also would bet that a lot of underrepresented founders are more dependent on their own idea succeeding than their white male counterparts who may come with some parachute. And that some of the people that you invest in may not have any other, immediate, cushion if their idea fails, and also maybe really dependent on what they're working on, which is a good thing typically in VC's perception, that they're super dependent on the success of their venture, but it's also a double-edged sword for your founders, right? Can you talk a little bit about those things?
Yeah, I forget the exact report, but they did a big study on like what is the biggest predictor of your ability to become a founder, and it's how much money your parents had. It's not location, it's not race, it's completely class. Which I think is super interesting. And obviously, those things are related. But I think there's a big thing at top of funnel, which is another reason I think pre-seed is really interesting, which is like it's really hard to just quit your job and like get started for 6 months and build something if you don't have 6 months of cash, right? And so I think that we sometimes expect people to like just quit their job and start building, and that's a lot harder if you don't have economic power, right? So I also would say across the portfolio, of which there are many lovely white men, like there's ambition across the board. And so I don't know that ambition is like necessarily tied to identity, but I do think that the gatekeeping on the front very much is tied to class background.
Just one really quick follow-up. I think that's so spot on. There's something else that I've seen floating around just the predictor of being an entrepreneur, not always a founder, but an entrepreneur, is that you have realized that you're undervalued within the current system, which I think is a very fascinating thing to think about it, where it's like, actually, if you don't think you're going to get promoted to VP at Apple because of the systemic bias that might exist, you're more likely to strike out on your own than actually if you think that you actually are both promoted equitably, paid equitably, all of these things. Which I think is also an interesting point to think through.
Looks like we have one more question.
So I have the unique pleasure of working with both of y'all. And what's crazy about working with both of y'all is like the timing. So I don't know I mean, this isn't really a wide part of our story, but there was like a point in eternal history where we had like a negative bank account balance and our angel investor was like paying our rent. And then Charles was like, okay, I'm not gonna write you the full check now, but I'll give you like 50K to just like not like die on the streets of San Francisco. And then that like led to us, you know, still kind of dying all the way up until like Kate just like rescued us. But I think what's really interesting is like the precursor model and the now Baukunst model are just so different in the sense like, you know, Kate took a board seat during our like true formation and we just went like really deep and really hard. Whereas Charles was just like, don't die. And then I talked to Charles like months later, right? How do y'all think about in a capital environment where people are going like fully up the stack of just like company formation to like, we will underwrite your, you know, direct listing type beat to, you know, like even what comes before company formation with capital, right? Like that's something that I'm starting to think about. Like how do y'all think about your changing models or like really staying in, you know, your tight drummer's pocket of where you are?
It's a really good question. Because so much is changing and I think continues to change within venture within every 6 to 12 months. I think that the change that I've seen happen in just like this flooding, there was actually a really good tweet about this where they just had like all these people lined up and to give founders capital from like pre-seed to seed, and then at seed to Series A is like crickets, like nobody was there. And so once the company actually has some amount of traction, it's a different ballgame. And I think that though, there's still so many different people, VCs have so many different perceptions of what success means for a founder and what success looks like, what their archetype of founder looks like, which I think allows for there to be a plethora of different types of investors at the pre-seed stage. And I mean, you know Charles, he's never leaving pre-seed. He loves it, like it's his favorite thing in the whole world. And I think this whole diversified model as well is something that he's really committed to, which I think is a thesis. And so I think it's going to be really interesting to see how things play out over the next couple of years. But I do think there is a hypothesis that I think is true, which is that not all VC thinks the same founder is great. And so you need a variety of VCs in order to invest in a variety of founders, in order to ensure that a lot of different folks get this opportunity to hit that, you know, success milestone, whatever that looks like for that founder and that VC.
Yeah, two things. I'm a huge proponent of universal basic income, both for artists and for founders, and to really change accessibility. So that's like a personal passion of mine. And I think that thing of like, you need money to eat, you need money to pay your rent, like that's real. And in addition, like really part of the reason that we like, you know, write a big check, go deep with the founders is twofold. One, I have the spiritual reasons why I do this, and I also understand what my job is, and my job is to make money for my LPs. Stephan.
I can't wait for that.
Yeah.
I really need that.
Well, and part of like what we you know, there's just basic math around like what needs to happen at an exit, and a big part of that math that drives our return is ownership, right? And if you want to own a lot of a company, then you need to write a bigger check. And it's our belief, like it is our philosophy, our belief, that the best way to do that is to like come to strong conviction on people, to really make a high conviction bet, and to get the ownership in exchange for that. And that is about making money on the back end, right? It's not just about the who or about the what or the why, it's really about the how, of how we get the privilege to keep doing this work. Because if you don't make people money, you don't get to keep doing the work, right? And so if you want to keep doing the work, you gotta make people money. So ownership is a big reason why we like write a large check for our fund model. I think the other thing that you touched on is like, why do we take a board seat at pre-seed? A lot of people think this is insane. Like, I personally believe that the early building phase, the pre-product market fit phase, is a very unique animal. And we believe that by specializing in that phase, we are able to serve people well in that phase in a way that people that are doing Series A, Series B growth can't. I think it's very difficult to cognitively write a $1 million check one day and write a $10 million check the next day, and to not pay more attention to those $10 million checks. And I think it's really hard when you're doing pre-IPO boards to pay attention to that little fledgling company, right? So we are believers in specialization, and that is very powerful. And so that also is another reason why we take board seats and we really concentrate on showing up to do the work in a very hands-on way.
You heard it here. It's all about the money. That's the only thing that matters.
That's all I care about. I'm just here for the money. I'm glad that's your takeaway.
Well, thank you so much. I think that I want to also give a big round of applause to Kate and to the team here for putting together this great event. And truly showing that it's not all about the money. So thank you.
Thank you,
And thank you,
Stephan.
Sydney, as well.
Yeah, this is so fun.
It's been amazing.
Yeah.